Hi, and welcome to Teach It by Cece. My name is Chelsea Kleins. I hope you enjoyed today's video. Make sure to like and subscribe to my channel and ring that bell to get new notifications when I upload new and awesome content. Enjoy today's video. Welcome back to Teach It by Cece. This is Mrs. Kleins, and in today's episode, we're going to begin our unit on personal financial literacy. This will be a four-part series, and in today's part, we will be talking about financial vocabulary. The first thing we need to look at is, why is financial literacy so important? Well, the first thing is that the financial decisions that you make over time, they are going to impact your future wealth. This is things like your net worth, but can also impact whether or not you can obtain a loan for things like mortgages, cars, and even paying for college. Which brings us to the other reason why financial literacy is so important. And that's, even though it's expensive, learning how to manage your finances is going to help you to determine how to pay for things like college or a mortgage or a car. However, in these lessons, what we're going to be going over is determining how to pay for things like college. So I want you to ask yourself two essential questions and keep them in the back of your mind over the course of the next four parts. We're going to try to answer these along with a couple of others. The first one is, what is the benefit of using a debit card versus a credit card? And our second question is, how does salary impact your financial situation? So let's break down how we're going to be covering financial literacy over the next four parts. In part one, we'll be learning about financial vocabulary. In part two, we're going to go more into how to balance a check register and also discussing the features and costs of having a checking account. In part three, we're going to start going over debit cards versus credit cards and talking about credit reports. And in part four, we're going to look at the methods to pay for college and also comparing and calculating annual salaries. So for today, let's start learning about that financial vocabulary. Financial vocabulary is very complex and there's a lot of terms. However, for the purpose of this unit and at this time, we're only going to be going over the main ones that you're going to be seeing and that we'll be talking about over the course of the next four parts. So let's begin. The first thing we want to talk about is a budget. This is a tool that you can use to track your exact income and expenses within a set period of time. This is going to ensure that you are living within your means. Our second vocabulary word is credit score. This is a number that is assigned to each individual and it determines your credit worthiness. This is what lenders use to see how likely you are to pay back a requested loan, and the scores range from bad to perfect. Bad being 300 and perfect being 850. Let's look at a credit report. A credit report is just a compilation or a summary of your entire credit history. Credit scores are based on info from this report, and it doesn't give you your credit score, it just tells you your payment history, whether you've made payments on time or have had late payments and the length of time for those late payments. Our next vocabulary word is checking account. A checking account is a liquid type of account and it's found at most financial institutions. We call it liquid because you can easily access your money with deposits and withdrawals. These type of accounts usually do come with a debit card, and that debit card is usually protected by a PIN number. An automated clearinghouse, or an ACH, is just an electronic network used by financial institutions to make transfers in the US from bank to bank. These are going to be things like payroll, bill pay, and tax refunds. So earlier we talked about checking accounts and how it's associated sometimes with a debit card. Well, a debit card is a card that is connected directly to your bank account, and it's usually protected, like we said, by a PIN number. A credit card allows you to make purchases up to a certain amount, and this is called a credit limit. Unlike a debit card, credit cards must be paid back over time, and they will have interest. So we've talked about a PIN number, but what is the PIN number? Well, this is a personal identification number used to authenticate your identity. If you've ever looked at a check before, you'll probably notice at the bottom there's a series of numbers. One of those numbers is what we call a routing number. It's a 9-digit number at the bottom of a check, and that is the electronic address for your specific financial institution. When we talk about direct deposits, we're talking about an ACH transaction where your payment is electronically transferred to your bank from your paying job. Besides payroll, it can also be things like Social Security deposits or tax refunds. An overdraft is when you attempt to make a purchase without enough money in your checking account. Let's talk a little bit more about that. It's usually the bank or financial institution is going to pay for the coverage. However, you are going to be expected to pay the negative balance the bank paid plus any overdraft fees charged by your bank for covering your overcharge. We'll go more into this in the next lesson. So we talked about a checking account, but another type of account is a savings account. And with a savings account, this gains interest on money put into the account. It can also have a debit card linked to it, but what's good about savings accounts is they allow you to put money away so that you either have extra money if an emergency arises, or it can help you plan for future expenses. The next thing we're going to talk about is an APR, which is an annual percentage rate. This rate is the yearly cost of interest over the principal amount of a loan. So, for example, if the APR on a personal loan is 8.99%, this means that you're going to pay 8.99% of your loan's interest fees. In financial literacy, the principal is not the person that you get sent to if you're in trouble at school. A principal is the initial amount of money that you borrow for things like a car loan, credit cards, or a personal loan. Interest, how we mentioned earlier, is the fee that you're going to pay for borrowing money when you take out a loan. You're going to pay the principal plus the interest. So for example, if your loan was for $1,000 and the interest on that is 5%, you're going to end up paying over time the $1,000 plus 5% on top of that 1,000. And that would mean you'd pay $50. So the total amount that you would pay back for your loan is $1,050. But more on that later. Next, I want to talk to you about variable interest rates. These are interest rates that change periodically and they're based on economic conditions. Unlike a fixed interest rate, which is a rate that never changes through the life of the loan. So you might be asking yourself, how am I going to be using this information? This is a lot of vocabulary. Like we said before, the financial decisions that you make over time are going to impact your future wealth. And though it's expensive, learning how to manage your finances is going to help you determine how to pay for things later in life. We'll be discussing college. So let's go back over the breakdown of how the units are going to go. Today we went over financial vocabulary. In the next episode, we're going to be discussing how to balance a check register and also the features and costs of having a checking account. In part 3, we'll go over debit cards and credit cards and also what a credit report is. And finally, in part 4, we'll be doing methods to pay for college and comparing and calculating annual salaries. I know today's lesson focused a lot on vocabulary. and it can be a little overwhelming. But don't worry, in the next few parts, we'll be using this vocabulary when talking about the different parts of financial literacy. So meet me back here next time for part 2, balancing a check registry and features and costs of a checking account. Until then, this is Mrs. Kleins signing off. Well, everyone, that's it for today's lesson. I hope y'all enjoyed it. Remember to like, subscribe, and turn on that notification bell to get notifications when I post new and exciting content. I hope that y'all have a great and blessed day, and see you soon. Bye.